what people end up doing is they procrastinate on the things that the universe is telling them that they shouldn't do. That's what procrastination is. You're like, I don't want to do that. It's like, good. Stop signing up for whatever that is, because you obviously don't like it. The things that you really like, you'll do eagerly and aggressively. And the things you don't want to do, you're going to procrastinate. So anytime I look at, for me, it was flipping. It's this active type business. But I guess the advice is look at your life and decide like what it is that you are actually avoiding to do, and then find out why.
Welcome to the Real Estate Mindset Podcast, hosted by Eric Nelson and brought to you by Wild Oak Capital. Eric is a real estate investor, business owner, and performance coach. Throughout this series, Eric explores the mindset behind why certain investors are so successful and how we can learn from their achievements and failures. Eric asks the tough questions around the habits, discipline, mindset, and more required to achieve the most ambitious goals. Thank you for being here and enjoy the show.
Hey everybody, welcome to the Real Estate Mindset Podcast. This is your host, Eric Nelson. Today I have an awesome guest. Alex, I want to let you say your last name. I should have asked. How do you pronounce it?
Felice.
Felice. Oh man, I thought maybe it was like Felice or something special, but Felice is great. So if you could give us background, man, where are you from? What have you been up to? What led you to real estate?
Yeah. Thanks for having me. I been in real estate. I got in around 2014. Wasn't really. I was in a job I hated, like a lot of people, living week to week. And I was like, man, I got to figure a way out to invest that's not for equities, because I wanted freedom, I wanted cash flow. And so I was like, what can give you cash flow? I didn't have that much money. I didn't have that much experience. I didn't, so it was just like, I started looking into, I'd heard about real estate, reliable cash flow, and you can use debt. And in 2014, the middle of the foreclosure boom, you could go around the MLS and find houses around my area for like 30 grand. It took me a little while to get started, but I bought a bunch of those. And in 2019, I started buying small apartment buildings. And fun little journey.
Okay, so let's dive in a little bit. So what have you been up to since? I mean, you started buying stuff. I mean, let's dive in a little bit. So describe, like, first of all, like what it was like early on. I mean, because it's interesting you say you don't have any money, because that's, I think what some people will say is like, well, I don't have any money. How can I get started? So let's dive into that a little bit. How did you get started?
Yeah. I don't know how I stumbled across Bigger Pockets, the podcast. And I was like, man, these, it's just a bunch of idiots on the internet buying up houses. And I was like, if these idiots can do it, I can do it. And so a lot of it was just confidence to start looking. And you go, like I said, you go look at the MLS and you're like, 30 grand. I mean, I didn't have it, but we ended up finding one for 55 that I could move in. So I got an FHA loan, 3.5%, which is like $3,500. And I moved in it. It was ugly, right? It was the foreclosure, but it wasn't in disrepair. So they let me move in. No big deal. That's much harder now because you're at the top of the market. Everybody acts like they forget the market's going cycles. They act like, oh, it's new to me. It's exciting. Real estate's going up. It'll always go up. But the reality is, it's a cyclical thing. So in 2014, we were at the bottom of the cycle. And so I ended up buying 8. I don't think I own any of them for more than like 60 grand. Right. And they're triple that over the last, even only 3 or 4 years. But I got the first one with an FHA loan. It was like 2 years later, I refinanced it, pulled a bunch of cash out. I had saved money. I started burning them. So once you can buy the first one, you can buy all the rest of them with the same money. It's not rocket science. You got to save a little bit of money, take some time.
Yeah, man. It's interesting. Like, I love that you simplify it that way. Cause like, I think some people like make it more complicated than it is. I mean, the BRRRR strategy takes skill. It takes knowledge, like get educated. I mean, obviously Bigger Pockets is a great tool. Understand what you're doing, but yeah, then dive in. I mean, I think that's like, I commend you. Cause yeah, sometimes it's like, oh my God, I have to have so much money. I have to have so much knowledge. You just have to have a little bit of something. And then maybe you can partner with someone who has knowledge or partner with someone who has money. Or your strategy is awesome. I mean, 3.5 down. And you said you can't do that anymore. I think you can actually. It's harder to find the deal.
it's hard to find a $55,000, 1,800 square foot house that you can move in ready that was $70,000 underpriced.
Yeah, that's true. Yeah, absolutely.
We bought it for 55. We bought it for 55, and 18 months later we refinanced it, and they said it was worth 120.
Yeah, so those deals are absolutely hard to find. So where's your market?
Fayetteville, North Carolina.
Okay.
Yeah.
So, and now what are you doing? Let's fast forward a little bit, and then we can kind of jump back in time. So it sounds like you bought an apartment complex. Is that right?
Yeah. So I was doing this as a side hustle while I was working in banking, specifically commercial underwriting. So I know the loan side of the business really, really well. And in 2019, I bought single families. You know, like I just said, the market's hot. Prices were going up, and I was like, well, I got to stay ahead of my competition. So I started looking at. We bought a 24 unit. Not my best deal of all time. At the time, it was rough, you know, but it was a good learning experience. And then once that stabilized in mid 2020, we went off and I bought a 52 unit. We syndicated that deal, all here in Fayetteville as well. And yeah, that's kind of where we're at now. I'm looking now to partner with a more established operator and do kind of work on along the way. I picked up marketing. I got my camera on here somewhere. I'm a camera guy. And so I do a lot of, I spend a lot of time now doing marketing and content for a lot of friends and stuff, but a lot of real estate entrepreneurs.
And so you say you want to partner with someone. What do you mean? Like, what would be a perfect scenario for you? Just out of curiosity. Like, you want to do their marketing, you mean, or you want to team up and be on their GP team, or like, what do you mean?
Yeah, probably both. Because I know the business well enough. Marketing and capital, probably capital raise.
Got it. Okay, cool. So let's dive into Fayetteville. I actually toured a couple like apartment buildings there myself. Went there with my partner. I love that market. I love that town. I was blown away. I'd never been there. I'd heard it was cool, but very, very cool. Plus I'm a mountain biker. So it's kind of like kind of a dreamy place to be for sure. But so do you live there? I mean, are you focused there? Do you look outside of there? I mean,
are you talking about Fayetteville, North Carolina?
Oh, okay. Sorry. I think I was talking about Arkansas, but you're talking about North Carolina. Okay.
I'm like, there's no mountain biking. I don't know what you're
All right. Sorry, man. I think obviously we're talking about different markets. No, this is important. So, do you just look there? I mean, do you look outside of there? I mean, what's kind of your story with that market?
Yeah. So far I've been just here. I think, for me, I'm a kind of an audacious guy, but as an investor, I'm very risk averse, very, very probably closer to paranoid. It helps me as, you know, I did bank underwriting. And so that's a very valuable skill set. But for me, certain things that other investors either don't worry about as much, or maybe they under worry, and we haven't found that out yet, is understanding the market dynamics in the place that you're going to invest, for me, is very important. Not just, you know, what's the average rent price, because average rent price doesn't really tell you a full story. It's kind of like, what are the demographics and who's going to rent this place? And, you know, what are those people's lives like? And what's the job market like, and the concentrations and the density and the distances, and how's that going to change? And what's the population doing? And so I really want to understand the market before I outlay a bunch of cash or raise a bunch of, you know, people's money to put into deals in places that I don't really know. So for me, Fayetteville has been where everything I've done is, because this is the market I know best.
No, I mean, this is super powerful. So early on, when I was like just starting into the multifamily journey, I had a mentor basically, and he was like, you have to know the market. And it was pretty boring, tedious work to kind of learn the market, go there, all the demographics you're talking about. It's like job growth, job diversity, population growth, those type of things. But it's incredibly valuable. So I think you're right. I think people don't talk about it enough, because I'll talk to some people who say, I'll invest anywhere. And that can be, I think, a little bit of a dangerous game. If you don't know the market, maybe you can rely on some people. But I'm 100% with you. I want to understand the market I'm in, and not even necessarily the city. I want to understand specifically where the property is. And then, like you said, like, you know, areas around it, what's the jobs, and you said, what's going to change, which is the challenge. Like, what does the future hold?
Yeah. The other thing is people. Like, you're going to always be second to the relationships that are face to face. So you're going into a place where the people who live there are going to have an advantage just by proximity. just by I get to see these people more often. So building those relationships in this business, your management companies and contractors, it's really, really important. And it's just harder to do when you don't have any, when you don't go to a place, or you don't have regular access to it. So there's a lot of factors. But for me, again, I'm not opposed to investing out of state, somewhere else, but I have to really understand that market. I know people who buy places, it happens all over the country where, what works in your market gives you a bias for what you think works somewhere else. And so it's the California buyers, right? I'm going to come to Fayetteville. I'm going to spend all the money because it's cheap. And it's like, yeah, in relative terms, it is. And some people are playing a game that matters, where they're like, I just need to get rid of capital. I just need to get rid of liquidity, so they can literally overpay for a property if they get cheap debt, and they need to have a low cost of capital rather than high returns. And so I don't play that game. I need to play the high returns game. So for me, I have to be very diligent about getting deals. Just because they make sense on paper doesn't mean that they're going to translate to the real world. I had a girl call me about a month ago, and she's like, I bought this place that I can't get a proper manager to go to because it's such a bad shape. It's in such a bad area. I can't get a proper manager to show up. And she's like, but the numbers were great on paper. And I was like, I can't do anything with you on that. I don't know how I can't help you.
Well, yeah, so my group has no interest in like D-class properties. And it's funny because of course the numbers work. They're trying to sell it because no one wants to buy it. It's like this supply and demand thing. So it is true that on occasion you'll see these deals that look great on paper. And then you go there, you ask your manager to go there. If you're not getting a property manager to go there, my advice would be walk away. It doesn't matter how good of a deal it is. It might be the biggest headache on the planet. So none of my business really for that, but that would be my thinking. So are you still in your job? Do you still do underwriting? What's kind of your story there?
I quit in 2019 to just, enjoy my life I never started this to be a real estate entrepreneur. My goal, honestly, was get 10 properties in 10 years and then just, kind of build a nest egg. And I ended up getting like 70 doors in 5 years. Now, this is way easier than I thought. So in 2019, I quit my job. I came back here in Fayetteville. I was living in Las Vegas, came back here and can kind of work on the business, and did a couple of flips. And I've been really leaning into traveling and photography. So that's been going well. Now I think we're going to move to Charlotte, and I think we're going to ramp some stuff back up, focused on real estate.
That's awesome, man. We'll dive into travel a little bit. So where have you been, and let's talk about like a dream trip.
I just got back from Belize. That place is dope. Yeah. Mostly I've been all over the States, actually, a lot of places, a lot of conferences I cover. I don't know about dream trips. Turkey. I really want to go to Istanbul, and I got a Germany trip planned. I think I'm going to do next year. Awesome.
Yeah, it's just kind of a personal thing. I love travel myself. So very cool. So let's talk about your properties. So you have 152 unit, you said, in Fayetteville. Are you looking for more? What is your future hold?
Dude, finding deals is an effort and futility right now. It's tough to find deals. I was buying C-class multifamily, but they're tough. They're tough to find, and people are paying 5 and 6 caps for them. And that's a tough ask. So I'm looking, but that's why I look at it and say, hey, the market's hot right now. It's really exciting. It's really populated, and my goal is not to buy at any kind of stress level. So I meet and talk to brokers every week, but in the meantime, I am trying to, like I said, add value to other operators who have better deal flow, fit in where I can get in where I can fit in.
Very cool. So what was it like to go from like flipping kind of the single family scene to jump into syndication? First of all, what does your team look like? Describe the deal a little bit, and then, maybe some challenges in syndication.
The first one was really stressful. It was only $1 million deal. We raised $280,000 from people that I met from my email, just my website. Had no idea what I was doing. I undercapitalized. That's the biggest mistake I made. Do not highly recommend you don't do that. Whatever you think you need, add a bunch, then double it, kind of thing. Like, you're going to need, it's way better to have too much cash than not enough. Because once you have not enough cash, you get crunched. But, it was stressful, but we got through it. And then it was a hard turn. It was hard to turn that deal around. And then we ended up selling it this June. I paid my investors a 50% IRR. I was very happy.
Yeah, that's awesome.
Very, very happy with that. When we bought the 52 unit in December of 2020, December 2020, yeah. So just under a year ago. That one was actually less stressful, even though I had to raise 1.4 million, which was it was a lot for my second deal. And it was a little daunting, but I was a lot more confident because I had the experience. And so it's interesting that the first deal, the smaller deal, was much harder. This bigger deal, it was a better deal. So I believed in it more. So it was easier for me to sell. It was easier for me to ask for investor capital because I was like, this is gonna make money. I know this is gonna make money. I already made money on the crappy one. I know this one's gonna go well. Much better area, much better debt. We brought in some partners. That was a mistake I made in the first one, or I was just trying to do it myself because I'm an egomaniac, like most people in this business, and everybody wants to be a GP. And so I wanted to do it myself. So the second one, I was like, don't do that. So I called some partners in. It really just gave me a lot of confidence. Doing the syndication was not that hard. Raising money from 20 something people is like herding cats. The legal, and the debt were really easy. I have one main partner, this guy I met from my website. He's he's my lifeline. Super organized, quiet, behind the scenes, very professional, has his shit together. I'm kind of the wild card. And so I can sell and I can talk about these things, but he's very organized. So he gets us through underwriting super clean, and he'll get us through lending, and the legal. So actually the process was not that difficult. If you have a good deal, that you believe in, and you have a reasonable, social network, then that's kind of, I don't want to say it's going to work itself out, but if you have the good deal, the rest is kind of easier.
Got it. Yeah. So, I mean, we struggle. I mean, I struggle with lending just because it drives me crazy. It's not even hard. Like you said, it's usually pretty simple. It's just a lot of paperwork, answering questions, that type of stuff. It just drives me nuts. And then the legal, to me, kind of a similar story. Again, as long as your attorney's doing a good job, it's not terribly difficult. I learned a lot, in the first one, I learned a lot. So what are some things that you learned? Maybe you could share with someone who's just starting out. Like, what are some things maybe to avoid even, or whatever, some tips to get from single family to your first syndication?
Stop looking at single family homes and start looking at multifamily. Like, it's a commit thing. If you go through the motions of buying single family, you're going to end up buying single family. But if you're going through the motions of what it's like to buy multifamily, then, you start looking, you talk to brokers, you look, you find one, you bid on it, you miss it, you bid on another one, you know what I mean? And then eventually, one snags. So you just have to go through the motions. Same as single family, right? Like, you're not going to get a house unless you put in offers. Everybody knows that. If you put in offers, you're going to get a house. If you don't put any offers, you won't get a house. That's how it works. It's not complicated. It's just efficient, like a closing ratio plus time. Yeah. So multifamily is the same way. You need a bigger team. Definitely in multifamily, you need a bigger team. Other than that, like, processes are probably 80%. Like, it's all nuance, right? The processes largely are the same. The nuance is much different. It's a lot more moving parts. The deals are more fun for me because I don't care about a house. I care about big picture, abstract kind of projects. And so for me, it's very much like, okay, this is what's going to happen over the next 5 years. And we're going to put this big pool of capital. It's asset allocation for me. And I like that portion of it. But you need somebody who's organized to run like project management, essentially, like ops. You need somebody who's underwriting and ops. You need somebody like to do that. You need somebody who's going to raise money. You need somebody to find the deal, and then you need somebody to do asset management. So if you're building a team, like, find out which one of those are, or maybe two. You might be two of them in the beginning, and then get somebody who's really good at the other one. Don't get any overlap.
Yeah, man, that's good. That's such a good tip. So it's funny, like, those things that you named, that's the team I have, right? So I have an excellent underwriter. He loves the behind the scenes stuff, hyper smart, hyper organized. I have basically a sales guy who loves to talk to brokers and go, to the sites, gets the deal. Excellent at that. We have an asset manager. He's he's real, same story, pretty organized, like thinks to the future, that type of thing. And then typically myself is going to be sort of leading the ship, and then also like marketing, kind of like you said, kind of raising capital out in front, that type of stuff. So I think that's a perfect team you laid out. And the other thing you said was talking to brokers. Cause I think, to me, like when people are first starting out, it's exactly what you said, is get on the phone with brokers, get in the same room as brokers, because they're kind of the belle of the ball in this world. Unfortunately, it's so much different. There's no Zillow, there's no efficient Zillow for commercial work or for apartments, in my opinion.
Yeah. Well, the other thing is people go like, how come you're not doing direct mail marketing? And I'm like, these properties are 15 to $40 million. There's not that many. I don't want to speak out and be wrong, but it just seems to me that there's not that many mom and pop leftover $30 million, assets that like somebody's taking care of, somebody's paying attention to this thing. They have real resources coming in here. And then when they're going to sell it, they want to make sure that they're going to do it, that they're going to get real qualified buyers. They're not sitting around. I just don't believe there's just not that many $30 million assets sitting around like croaking and just waiting for a letter to come in the mail. And they're like, oh yeah, I guess I'll take that $30 million paycheck. I just imagine a lot more of it goes through brokers for that reason. So I spent a lot of my time on brokers.
Oh, no, I think I couldn't agree more. I think brokers, again, like hold the cards. I wish it wasn't the case. It'd be nice if there was kind of like a MLS, for lack of a better word. Sorry, I thought I had to sneeze there. That was hilarious. We'll edit that out.
It is what it is. It's a relationship game. It's kind of like baked in the cake. It's so funny. I don't like brokers for really simple trends. I don't like using brokers for real estate, like residential real estate, because I'm like, this is one little asset. It's not that big a deal. The more complex the asset, then I think brokers actually do provide more value. Interestingly enough, the percentage, if you're on a small house, they get bigger percentage than if these big properties. I think that's interesting. But a lot of them, they weed out, they really help bridge complicated transactions, and they weed out, they kind of force you to be competent, which is good. They're not gonna, not to say that they're all, obviously all brokers are not created equal, but the experienced ones who are really trying to add value, they will either help you tighten your game up or make sure that you're bringing a real package to their client if they're representing them well. And I think that keeps everybody kind of tight, which I like.
No, I agree too. I think, like, a lot of times, again, when people are starting out, they ask the questions like, how do I get started? And, like I said, talk to brokers. But I think even before that is get educated, because they'll sniff you out right away. If you call them and you're like, oh yeah, I'm buying apartments, they'll know if you know what you're talking about. They'll know if you're a serious buyer. So it is a challenge. I mean, number one thing is really get educated. So you're right. I mean, in that sense, it's kind of nice because they're going to force you to do your diligence in that part of it. So yeah, I completely agree. Well, Alex, second part of the show here, we'll kind of jump over is I just ask a series of questions. Again, no right answer. It is what it is for you. So honesty, and then we can kind of roll from there. So first question is, what do you have a morning routine?
Oh my God, dude, I'm the worst. No.
See, I'd love this question for that reason, because everyone's answer is different. So
I want one, but I can't do it. I'm too undisciplined.
This is so funny because it's so mixed. Some people are like, yeah, miracle morning, 6 a.m., do the thing. And I've had several guests who are like, nah, I sleep in. It's not my time to work. I like to work late, or I just roll out of bed and I just start hammering. So it is what works for you. So no, I dig it. There's no pressure to feel like you have to have one.
No, I don't feel any pressure. I'm just like, oh, I'm chaos unbound.
I like it, man. Well, let's talk a little bit more about that. So I think I saw some photos looked like on your website, like you're in the gym. I mean, are you into the exercise thing, or what's kind of your scoop there?
Dude, I've had a tough year. 2021 has been brutal for me. But yeah, I've been a gym rat since I picked it up like in high school, 15 or 16, trying to like lift weights in the ground. I'm short. I'm 5'6". So I was like, okay, I got to get some muscles or and I got a mouth on me. So in high school, being 5'6" and 120, it's like, dude, you better get some muscles. Otherwise you're going to keep getting black eyes. So I had to bulk up. It didn't take till I was about somewhere towards the middle of my Army career. But this is about the first year that I've taken off since then. Yeah. Long time gym rat.
Right on. Yeah, the reason I ask is because I think a lot of people say part of their routine, whether it's morning, whatever time of day, is exercise. And for me, it's key. Like I feel like so much better. I have just clear mind. So that's kind of why I asked that question.
Health is wealth, bro.
Health is wealth. I love it. I love that. My wife and I joke like, what's the key to life? And like a lot of times I'm like, exercise, because it'll lead into so much more. You know, my mind gets clear. I think, yeah. So I love it.
It's meditation. It's physical meditation. There's nothing better. It's cheap. It's like, you know, what's funny is all the best investments, all the really best investments in life are mostly dirt cheap and readily available. It's like gym and books.
Yeah, I think I would argue, I'd argue a lot of them are free, man. Spend time with a friend, you know, go to dinner with a loved one. Like, yeah, a lot of the best investments truly are either cheap or free. So I love those sayings. I'm digging it. Health is wealth. I'm taking it.
Yeah.
Cool. Next one is, what books are you reading? Or what books can you recommend?
So I have a long book list on my website. If I can rant a little bit, I started listening to podcasts and audiobooks to learn real estate specifically. And then along the way, I was like, okay, as I mentioned before, like real estate's simple. Real estate is actually the most simple business model of all because it's only fixed income or fixed cost, right? Business plan. So it's really simple. And so after a while, I was like, okay, this is an effort. This business is all tinkering. It's not like the education portion is important, but it's limited. It's a really low ceiling. And so I still wanted to learn, and I got wrapped up into audiobooks. And so somewhere along the way, I started reading philosophy and history. And so for the last 5 or 6 years now, I've cleaned off 40, 50 books a year, philosophy and history. So I'm always reading something. I got a list on my website that's pretty long, and it's full of obscure stuff from dead Russian literature to, I don't know. I read a lot of new stuff too sometimes.
Right on. Yeah. So let's say one book you recommend for the audience. If you had to select one, I'm going to put you on the spot.
A guy named Nassim Taleb wrote a series of books called Inserto. The main one, my favorite, is called Anti-Fragile.
Awesome. All right.
Highly recommend.
Write it down. I dig it, man. This is cool because it's so much different than the books that I hear, you know? Okay, cool. Next one is, if you had a coach or a mentor, was it worth it?
Almost always. Yeah. Like the mistake, it's always worth, how do I say it? It's good to pay for mentors, or at least, or try to go find mentors and coaches. It's bad when you get somebody who's giving you bad advice and you don't know it. That's the only downfall about mentors. Everything else is all upside. But bad mentors that you are giving you bad advice and you don't know it can be really critically bad. I've had
I think that's super valuable. So I love mentors. I love coaches. But there is that like due diligence phase, right? So get some references, make sure that they're a good fit for you, you know, because you're right. So let's talk about your experience. I mean, have you had like a coach or like mentoring program or anything? I mean, you have to get into super specifics, but describe your kind of, I guess your kind of run with us.
I have a knack for people. So I've been able to get informal mentorship from people who I admire and people who have done much better in life than me, because I have a unique way of shoving my life into their life. I'm in one paid mastermind group now called The War Room. It is a group for military and veterans, real estate entrepreneurs, which has been very valuable to me. Very, very valuable to me. And so I like that aspect of it. And I'm going to continue to do more of that. I highly recommend it. You kind of got to know what it is you want out of those things. And then they're all different, right? Who you get and who you're with really matters. But in the past, I've had other mentors, when I was younger and not as wise. You look at somebody and it's very easy to pick bad role models and not know it. Especially when we're young. So yeah, I've had mentors and people who have just they had mindsets that they were imparting on me that were actually that in retrospect, I'm like, I need to unlearn that shit. So it doesn't happen often because people just want to help. I guess the other advice is the other thing that to watch out for with mentors is if a really good mentor is going to teach you how to outgrow them. And so what I found is I've had mentors too that were like, they got salty when they teach me and then I would outgrow them and they'd get mad. And I'm like, dude, that's part of the thing. So now I go into relationships and I'm like, I want to grow with you, or I'm going to outgrow you, but I'm not going to stay below you. And so that's a hard transition to for a lot of people.
No, that's awesome. Do you have any desire to be like a coach or mentor to other people?
No.
All right, moving on. I've never asked that question before.
No, it's all good. Just to be clear, on my website, I write everything. I write everything I do, and then I make time for people all the time. I have Calendly link. Like if you ever want like time, I give people phone calls, and I love interacting with people. I do lunches and coffee with people. I don't want to make it sound like I don't try to help people or give back, as I really do. But being a dedicated if you need me to hold somebody accountable, that's not a good fit. I need, you know what I mean? I'm a mess in a lot of ways, right? So I'm just not the person who's going to be, that's not my role. I'm a motivational, like, hey, if you're fucking up, I'm going to tell you. Like, I'm that guy that people call when they want some harsh truths. But as far as coaching, mentoring one-on-one on a regular basis, it's just not I wouldn't be as valuable as, nobody would be getting helped.
I dig the honesty. Right on, man. So next question is, what is something that you've done that you would not repeat that we can learn from?
Did I tell you about that deal I undercapitalized? This last 2 years, I started flipping houses. I hate it. I think when I started this thing, I was like, look, I kind of really took a good look at my personality. And I was like, I don't want to have I started real estate because I didn't want to start a business that I had to go to work every day, because I know how I am. I get distracted. I like being distracted. I like my days being unpredictable. And so flipping kind of requires an active business. Like you got to go there every day, and you got to be taking care of this thing and making sure that it's going through the motions. And I don't like it. So then what people end up doing is they procrastinate on the things that the universe is telling them that they shouldn't do. That's what procrastination is. You're like, I don't want to do that. It's like, good. Stop signing up for whatever that is, because you obviously don't like it. The things that you really like, you'll do eagerly and aggressively. And the things you don't want to do, you're going to procrastinate. So anytime I look at, for me, it was flipping. It's this active type business. But I guess the advice is, look at your life and decide like what it is that you are actually avoiding to do, and then find out why that you avoid those things. Because if you stop signing up for them, then you're usually bad at the stuff that you procrastinate on, right? It's like, I don't want to do it, so I'm gonna do a lousy job and I'm gonna put it off. It's like, it's lose, lose, lose. So just try to identify those things, and then don't sign up for them, and sign up for the things that you're like, oh, I'm doing that anyway. How can I make money on that?
This is an amazing tip. So I just want people to I want to hone in on this big time. This is incredible. Find things you procrastinate on. And it's probably because either, like you said, you're not good at it or you don't like it. So stop doing it. If you can, phase your way out of those things you don't like doing. That's such good advice. So I think a lot of people are just like, I don't procrastinate because it's, has to be done, but I don't really want to necessarily. But if you can find a way to not do them, that's incredible. So I love that piece of advice.
Yeah. Well, if it's something you don't like, odds are you're never going to put the effort in to get good at it, which means there's no end game for this. It's going to be miserable forever. You just have to give it up. There's something you're good at. There's something you're good at that you like doing that's just as profitable.
Yeah, this is killer. I mean, I love that advice. It's so good. Cool. Next question is, what mindset tip can you give to our listeners?
Take radical self-responsibility for everything you do.
Yeah. So I read this on your website, and the thing is that's so much deeper than I think people think. So maybe just expand on a little bit. What do you mean when you say that? I mean, someone hears it for the first time. Dive in a little bit.
Yeah. So my website's called Broke is a Choice. It's kind of obnoxious. I recognize that. I did it on purpose. I'm not And the idea was back in my 20s, I was making good money, six figures just about. And I was always broke and I was living week to week. And, I always just thought, well, I'll get promoted or I'll make more money or like I'll save next week or I'll get better. And it was just this ongoing, self-deception. And my situation never got any better. And then one day, I had call it a catastrophic money event. And I was like, well, shit, now I'm broke. I can't fix this problem. And I just made a whole bunch of money this year and I have nothing to show for it. And so like, I really had nobody to blame but myself. And I think a lot of people are in this position in a lot of ways in our lives, right? Where we're in a position where we're stressed out, whether it's about money or, health. A lot of times we're out of shape. We don't take care of ourselves. And then we feel bad. And then, it's very self-defeating. And then you get in a position where you're stuck and you're like, there's nobody to blame. Right. And so a lot of it is that. And the other part of it is, people, I think in the back of their head, they have this tendency to think that somebody's coming to save them. And it's like, dude, nobody's going to care more about your life than you. No one. And that's just the nature of it, because that other person has their life to care about. You know what I mean? It's the same boat. And so it's like this idea that if you really dig that into your head, and then if you really start to look at, hey, look, most of my life problems are self-caused. 99% of my life problems are self-caused. Right? You live in America. Jesus, it's so nice here, right? I mean, even if you got it tough, you got it pretty good. Like everything else is pretty much my fault. So, but once I realized that all the things that I'm doing to make my life worse are my fault, then I was like, oh, well, I can stop them then. So now I can start making my life better. And so it wasn't that until I really, really, really deeply understood how my poor behaviors caused my poor life outcome that I was like, oh, well, good behaviors can have good life outcomes. And then then once you really understand it and really believe it, and you stop self-defeating and you start really saying like, these are the things that are making my life worse and I'm doing them. And then I can stop. And it's like, oh, your life starts getting better. Real good.
It's like, it's blowing my mind, man. Cause this is the last 2 minutes are like the perfect tip, like the perfect mindset tip, in my opinion. You're self-sabotaging yourself when you're blaming other people. You're not telling the truth, basically. Like you said, especially, I mean, there are people who like bad things happen to them out of their control. Absolutely. But sure. The reality is for most Americans, like you're describing, it's not the person you want to talk crap about. It's not your boss's fault. It's not your sister's fault. It's 99% of the time, look in the mirror. And it's super hard to do, right? It sounds easy, but like you said, once you buy in and once you realize, oh, you know what? The self-sabotage goes the other way too, where I can like self-improve. It's amazing. So that tip is so, so powerful. I'm so glad you expanded on that for sure.
Yeah. It's radical self-responsibility, and it works. And it's not even new. It ain't something I made up, right? It's ancient. This is why I read philosophy. But it's very, that's the best piece. That's the best piece of advice that I can give, because everything else can get fixed once you stop.
Yeah. And a lot of other things stem from there, right? So if you buy into it, like you said, if you really can learn and change, there's so much that comes from that. So what a good tip, man. Well done. So the last one is a 2-part question. First question is, what is your definition of success?
Oh my God. Doing whatever you want when you feel like it and not caring what anybody else thinks.
I love it. I mean, you can expand or leave it. I mean, I think that makes a lot of sense where it sits.
Yeah. Success for me is like contentment, not excess. I think the hedonic treadmill of more is more of a prison than successful to me. So I think success, the people that I know that are successful are the ones that are like, hey, I'm going to I'm doing this passion project that doesn't have any value to anybody but me. And that's it. That's what I want.
Yeah. Or maybe the passion project does have value for other people, but it could be a combination thing, right? So like, I know a lot of people who love to volunteer, for example, right? So they give their time, it's helping other people. It's selfish too, because they're feeling good. But I get what you're saying is basically like spend your time how you want. It doesn't matter what else thinks about it. So I mean, I love that thing. And so part 2 of that is, why are you successful and others not, do you think?
I think I've actually been pretty good about keeping my high level of independence. I think I have highly and well rejected materialism, which is hard to do. People want their toys, they want their stuff. I don't have kids, so I don't have that piece of it where, the kids want stuff. So now you got to get them, you got to reject materialism for the whole family. It's much harder. So I think that helps. I am a natural contrarian, which helps as an older age, because people are like, well, I got to go to work and I got to do this because that's what you do. And I'm like, yeah, I'm just not going to do it. Part of it is because I'm supposed to, you told me to do it. So I'm like, no, I'm not gonna. So it helps me really keep my my autonomy. I travel. I get to do some fun things that other people certainly can do, but they're tied into this. Even the entrepreneurs I know, a lot of them, right? They're like, I wanted to build a business to get freedom. Now I have all this freedom, but I don't know what to do with it. So I'm just still building my business. And that's not freedom to me. That's default boredom in many ways. So I don't have that. I have a lot of interest. So I think a lot of it is staying curious, staying a little rebellious. Yeah, those help.
Oh man, great stuff. Alex, this has been an awesome show, man. I really appreciate your time. The final question is, how can people reach out? How can people find you?
These days, I'm mostly on Instagram, Alex Scott Felice. My website is brokersofchoice.com. You can go there. You can find all my real estate deals in very thorough transparency. Also book lists. Feel free to reach out to me. I don't have anything to sell you. Just like talking to people, helping people where I can.
Yeah, I like it. Well, again, this has been a great show. Appreciate your time. This has been super valuable. Thanks for being on.
Thank you, sir.
Thank you for listening to this episode of the Real Estate Mindset Podcast. If you've enjoyed the content today, please follow this show wherever you listen to podcasts. And don't forget to head over to wildoakcapital.com for more information or to connect with Eric directly. Please take a moment to leave a review or tell a friend about what you've listened to today. We hope you'll tune in again soon.